Hi, my name is Felix Frey.
And I'm Marco Rajka.
We're here to find great trading opportunities that target 150 to 400% returns. And you, well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajka are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hello, Mr. Felix.
Hey, how are you, man?
Good. How are you?
Good. Crazy tape, huh?
Oh, man, this market is just nuts.
Up and down, up and down.
Yep.
I think it's really interesting what they did yesterday. I think it's important to appreciate how this market is working and how it's functioning right now. It doesn't, at the end of the day, I always say that the market doesn't want to allow everyone to win. It likes to reward. It has sort of this reward system that it's built into the market. And I think that looking at how they sold it off yesterday, methodically hard into the bell, I was looking at it thinking, I would never be 100% bullish or 100% bearish. So I'm more of an odds maker. We talk about it going to 400. I see potential to go to 400, a lot more than probably what the market is thinking right now, maybe even higher than 400 on the spot.
Right.
And I'm looking at it and I see it selling off, and I was really perplexed, to be honest, at the end of the day yesterday. I just was really very surprised. And, late at night, I'm working, I'm figuring things out, I'm watching the futures, and I say, okay. That's what they did, right? They really messed everyone up. They really got everybody to think, oh boy, here we go again. They're lowering their positions, and now they don't give people a chance, and they might not give people a chance here, to be honest. I've been telling you for the last few days, if you think about the millions of people, take a step back, forget about just you, and think about the millions of people that are trading this market on a day trading basis with leverage. You should ask yourselves, are their portfolios as big as they were 3 weeks ago? Are they as long as they were 3 weeks ago?
Right.
Is the mentality, rah, this is going to the moon, the same as it was 3 weeks ago? And I would say on all of those things have pared down a little bit. People have either taken some money off the table. They're actually thinking about puts. They're seeing that these things could actually go down a lot. So they're considering their options here, for lack of a better word. And I think that's when the market says, okay, we got what we needed. If you were still long after this, it's like a reward. The market says, okay, you can go along for the next ride, because we're about to take this, a lot higher. And everybody else is going to be like, what, but, and okay, I'll buy the next dip. And we might get 2-3 days in a row where there is no next dip, right? Mm-hmm. We literally might wake up on Friday and be like, we were just talking about it. We were at 372. Everybody's in a panic. And now it's 2 weeks later and we're at 399, going to pass 400. Right. And then the mentality switches and everybody jumps in. And then you maybe break through 400 and then you come down. I don't know. I'm not going to tell you exactly how it's going to happen, but I can see situations where it's this crowd moving up and down and getting in at the wrong times, getting out at the wrong times. This is probably the next 4 weeks on top of what we've been talking about, rebalancing and the COVID-19 checks, where you have this. You probably have $200 billion on both sides, buying and selling, and everybody thinks, oh, well, then it should equal out. It will probably equal out, meaning we'll probably end up in the same spot, but how we get there could be, a furious move higher and then a collapse lower, and we end up literally at the same spot. In the meantime, people are, frazzled as to what had happened. So to add to that, which is what we've been talking about, and it's important to frame our discussion always in the backdrop, the market. I read something yesterday that I thought was interesting. There's $1.64 trillion of realized capital gains in 2020.
Wow.
$1.64 trillion of realized capital gains. So April 15th is another special date here in the United States. We pay taxes. And depending on what tax rate you're at, could be anywhere from probably 20 to, I think it's 20 to 37%. You're going to owe 20 to 30% of $1.64 trillion of taxes, of realized gains. So that's a lot of money. That's, could be 300 to 500 billion dollars of taxes. Now, people just don't have that money laying around. They made the money, and for them, the difference between December 30th and January 5th is 1 week. But there's actually a tax year that stops. And so people, they're just still trading, going along month to month. But now your accountant's going to say, hey, by the way, you made X, and now you have to actually pay the government Y. And what do? You have to pare down your book. For many people, they will pare down their book, they'll take out some money, and they'll pay the government. But if you get surprised, and there is an element of surprise for many people, especially new people in the market, you made $1 million in GameStop, by the way, you owe the government a decent amount of money, okay? So, and the government will get its money. It's going to somehow get its money. So there's that element too coming in April. So like I said, the next 4 weeks, there will be a lot of volatility, in my opinion. There is enormous amount of cash flows being bought and sold into the market over the next 4 weeks. So we want to you want to respect that. That is a backdrop that we're looking at. You want to respect that. You also want to respect the bond market and where it's at. And you want to respect, we'll talk about it later, where the US dollar is at. Okay. So just a few things to always keep in the back of my mind. It's going to frame our discussion. It's always going to be, what about this? What about that? Because, when I think about the SPY or SPX 4000, SPY 400, I think what would stocks be doing at SPY 400, right? That's how we're starting to develop. So we're going to talk about that in a little bit. Let's get to the stock of, maybe the stock of the day outside of GME, which is AMC.
Yes, AMC.
What do you think? You want to start there?
AMC? I mean, sure. Yeah. Why not? Like, if you want to share.
So AMC, let's. I mean, they're earnings tomorrow.
A lot of people on Wall Street Bets talking about it.
A lot of people on Wall Street Bets talking about it. The stock has made this 3 to 20 move. 3 to 20 move, incredible move back in January, like the GME. Let's go back in time a little bit. I'd like to go back further. All right, so we're going back 2017 as a $26 stock. A lot has happened since then. The AMC over the years there's a lot of debt. There's a lot of debt in the company. I think there was an analyst today, Wedbush, that came out saying something positive. They raised their price target to 5. This was almost a bankrupt company. It looked like it was going to bankruptcy, and then the Wall Street Bets crowd, I mean, they scored big here by taking this in 2 to 20. It was a heavily shorted name. The stock is trading 10:30, and we have here, let's take a look. AMC is, let's just remove this. So we have an enormous amount. We have about 400,000 options trading. The majority is, we can just look at it. Let's go back over here. 83% of the 450,000 options are trading on the call side. Okay, so you got majority on the call side here. That's a lot of options. I would suspect a very good number is being bought. I suspect that people are loading up here on the 10s, 11s, the 12s. This one I'm not sure about. Looks like maybe someone's trying to sell these, doing like some sort of call spread. This reminds me of what happened in NEO last week. Okay, big name. People want to get in for an announcement, or they just want it, or 2 weeks ago for the announcement, and it trades. They were buying, I believe, the 50 calls. Everybody's leaning one way. I call it, people get caught leaning off sides, and the number comes out. It's good enough, but the market doesn't like it, and everybody has to sell their calls and is long stock and selling the stock. So this reminds me a lot of that, where you have analysts and hedge fund guys valuing the stock at, call it 5, 4, maybe. But there's a frenzy for the name. Not saying that it can't go to 20. It already did go to 20. So why couldn't it go up there again? The setup looks interesting. There's no doubt that the setup looks, if we just take a look at the daily, the setup looks interesting here. I suspect they'll try to push it to 11 by the end of the day. But I'm worried that this 2-day move in front of the earnings, okay, could get wiped out just on a ho-hum earnings, and you go from 8 to, you could trade easily back to, call it $6.5, $7. So I am concerned. I would actually, if I had to handicap it, I'd handicap it 60-40 against here, which means I would be handicapped and more towards the puts. But I would be scared to get too big on, I don't want to be short the name, obviously, but playing the options, my eye is geared a little bit more towards the 10s for $1 than the 10 calls for $1.40. That's just my opinion. It would be because everyone's here already, and everyone's long the stock. Again, we talked yesterday about value, growth, and fantasy. This is a fantasy name. Fantasy is doing well today. But always when the reality hits, which is the actual numbers and earnings and people talking about it, the professionals, investors talking about it, maybe you get something, a different outcome than what the fantasy, says it's going to 20. Right. Usually these big spikes are happening outside of these earnings announcements. It's happening because the story is getting legs, and then you start picking it up, and then the earnings come out and reality hits, and there's no more fantasy for a period of 2-3 weeks. So I'm a little nervous about AMC, to be honest. I see that it's up 12%. It was traded a little bit higher earlier. I'd be looking more. If I had a lean, I'd be leaning more to buying the 10 puts. I'm not involved. Go ahead.
Now that you mention it, I am involved, but I mean, I'm cheap. So I just bought one $9 put for $50.
One $9 put. Okay. Yeah.
I mean, because my logic is, the earnings. What are they gonna say? They can't say, "Oh, we had people in the cinema, we made more money." Like, there's no way. Like, I don't know. And if it doesn't pan out for Wall Street bets as they intended, then I see
a lot of
selling.
Down. There'll be a lot. Right. You can see a lot of selling. Right. So yeah, I mean that's how I would handicap it. I think it's very similar to the Neo. I stayed away. I'm looking at it. Everybody's buying calls. I get what they're saying that what they're seeing, that stock is down a lot, but at $50, everybody getting long. What if it's not as good? And you got the chip, you have the chip shortage. Maybe everybody was saying something negative. Again, 60-40 there as well. So here I would be 60-40 against on AMC. That's just my simple opinion.
Okay, cool.
Why don't we go into what's the next one?
Why don't we go into GE? I think we mentioned it yesterday.
Oh, we talked about it yesterday. Yeah. Okay, right. Good. So GE is 1421, coming off a little bit, looks like, but let's see here. GE. By the way, in that AMC, keep in mind, to buy the 140s, they're probably looking at $14, trying to get to like 14. You're going to pay 140 there to get to $13, $14. That's why they should be buying it. I think they want 20, but if it does go up, I would suspect, 5.5, 11, 5.5, 13, $14 to the upside, 6.5 to the downside. That's how I would make the market or handicapping. GE. So GE, we talked yesterday about the stock is looking pretty damn good. Trades well, good volume. It's always been a very good institutional name for people, and they've been waiting for a long time for this to turn. If we look at what I see today, I just wanted to point this out. The June 17 calls, there's 66,000 there. The trading. It looks to me that it's a sale, frankly. We come over here to 56,000, traded on the bid, 47.6 vol, which was almost the low of the day. So people might think that that's a buy. It is. I believe it's a sale. Institutions do like to do the buy right on this. They're long millions and millions in shares, and they take in premiums. Like, it's a good way for them to take in some premiums. So this one I think is a sale, but I think it should give you confidence that these institutionals, remember, if they're selling that, they believe in the stock because they are long the stock. They're not selling that naked. They're selling that because they're long millions and millions of shares, and they want to hold it, but in the meantime, they'll just clip coupons. This is one of those names where people have loved, they loved holding this for many years now, and they're just simply clipping coupons. They're selling calls. So they're buying stock, buying stock, buying stock. They're waiting it out. And in their process, they're selling out of the money calls. Over here, we saw them, back in November, they were selling calls and then they had to buy them back here because the stock was making a big move. But that's fine because they've taken in so much premium over time that they're willing to buy this back. Here, I suspect the 17 is this level. So, whenever they're selling calls, they're looking for a spot where the stock might pause, if you will. So I would say from 22, let's look at it here, from, a pause. This is basically a straight down for a long time, right? But, it tried to do a little bit of a dance here, and it tried to do maybe even a small little dance here. So, and then you have this area right here. So this is where we're at. We're kind of breaking through where it was trying over here. You see that it's broken through the 13 level over here. So, this is all past us now. So now we're looking at what's the next level. And I think, they're probably looking at something like 16, 17. It's still on a $14 stock. 17 is still 20% higher. So they'd be happy to sort of get rid of some stock and get paid, by the way, 50 cents to get rid of some stock up here. Or at that point, if it takes 2 months to get there, a month and a half to get there, that 50 cents is still going to be 40, 50 cents. So they're not going to lose that much. So again, just a good strategy. This is a name that forever has been long only stockholders. They're buying the stock, and then what they do is they sell calls. Okay. So GE, one for almost like one for the, the IRA or the 401k or one of those, that type of name where you're just buying and selling calls. Slow moving, generally slow moving. Although it is picking up a little bit of steam here. And then the other one we were talking about was which?
Facebook. Yeah. What's your take on Facebook?
Facebook. So again, same thing. I see it trading okay today. It was actually up a little bit. Let's see, no one higher. It's actually, I sold up about 9. Oh, it's up 12 today. Yeah. I'm getting really warmed up with this. I see, I'm waiting for those call buyers to step in. They have already stepped in, but I like to see them again. It looks like this is a call buyer here. Volatility is down today, but that's because the market's up. So a lot of these, are going to be down just because volatility in the whole index is down. But this one here, I see 23,000 of a buy here in May. This is what I'm looking for. I'm looking for more of this. It looks like it was, this, it's hard to tell, frankly. It's hard to tell, but it looks like this was actually bid up here. This is on the bid. Okay. It did trade. It looks like it traded on the bid, but the stock was actually, it looked like it traded down a little bit when they were buying these, or maybe tick lower, because I'm looking at the IV. The IV is actually going up when these are being bought. See, it's 37 and a half, 37, 37 and a half again, 38, 38.2. The IV is going up. And to me, that's a stronger signal than the bid ask. Okay. So, this is, to me, it looks like it's bought. It also makes sense to me that it's bought because of what we talked about yesterday. And, I like Facebook. I'm waiting. I've been waiting for these guys to come in. There is this overhang here in the stock with antitrust issues and whatnot. But if I'm thinking about 400 on the SPY, I'm thinking about who are the leaders, who's going to take the market up, how high can they go? And in Facebook, we're looking at something. I mean, we talked about yesterday how it's, there's value guys coming in. It's a fairly cheap stock. So fundamentally, when value guys are coming in, I assure you they're doing the work. So I don't have to do too much work, knowing that at least you're getting good value. Okay. Then the next question is, well, what's going to be the event that gets this thing moving? It's likely to be an earnings. It's likely to be another earnings event where they kill it. They're doing really well, and people are going to overlook and say, you know what? We haven't seen anything on the antitrust front. Perhaps this is the moment that, people are going to come in and say, forget that. We can't disregard it for too much longer. It's way too cheap of a stock. We got to start getting long here a little bit. And it'll give us some cushion if the stock starts turning around, if there's an antitrust situation that pops up in the next 3 to 5 months, okay, we'll get out at the first sign of smoke. So this being up here, I've been watching the name. It trades well. I see that the MACD hasn't hit a new low here. It's trading up here. It seems to me like it wants to The MACD wants to go this way, which means this would, kind of start trending right up into 280, 285, right into the announcement. I wouldn't be surprised. I wouldn't be surprised if come the announcement, the earnings announcement, whenever that is, I think it's late April. Is that what it was?
Yep.
April 28th. Okay. So late April, I wouldn't be surprised if you got a stock, as long as the market hangs in there, if you got a stock right around this trend line, wherever it is, 280, 285. And if it's a good number, you could see a real move to the upside. So I see people setting up in Facebook. It is continuous. Again, we can go into the open interest and we can say, okay, let's look at 265 to, let's just call it 325. I'll click 5%. And, this is what I've been seeing. It's been this 16, 30,000. It is January further out. It's June further out. This March stuff, you see a lot here. I think this was done several months ago.
Yep.
Although they're adding, so this is expiring. But remember, when these expire, you got really nothing here except something up here at the 300 level. So there's not a lot of friction if this thing makes a run and starts to go. There's a lot of friction up until next week. Okay, up until next week, 280s, 285s, 290s, 300. This is all friction because as the stock moves higher, these are going to be sold. But when March 19th is done and we're ready to sort of look at the board again, there's nothing really here right now. Okay, so somebody just bought the maze right here, so they just added to here. So you see this circle, this square?
Yep.
Right here, my line is going. That
270 to
square is
305,
empty.
right.
Yeah, it's empty. It's really empty, right? You got some Aprils here, 270s. You got some Junes, okay. But other than that, it chews through that. It's empty here, and that's when you can see these gaps or these larger moves. And the move would be okay. You get through this, and the move goes right to sort of the 300 level where you have 9,000, 30,000, 7,000, 60. You got a decent amount up here. Okay.
Cool. Yep.
So that's how I look at it. I tend to look for where these pockets where there's no friction, if you will.
That's a good clue. Nice. Yeah.
All right.
Yep.
Okay.
Love
cool. What else are we looking at?
Let's look at DDD now. I've seen some stuff in April.
DDD.
3D systems. We covered it once.
Yeah. It's a high. It was a high flyer. Where is it now? It went really high, actually.
It did 100% move, I think. Yeah. In a day, something like that.
Right, triple D. Wow. Okay. All right. So let's just frame it real quick. What do you see that's important? Because this is a little bit tougher because it's not much as a straight line up and down. But what do you see that's important?
Right. One line or.
Where does your eye go? Yeah. Just give me one line to start.
You're looking at that 23 level.
Okay. 23. Right there. Okay. So let's do 23. And I would say you're right. That's what I was looking at but maybe it's a little bit different than just looking at this here. Okay. Because I'm sort of looking, I need to start somewhere back here, but I'm looking at this. You see this volume right here?
Okay.
See that volume right there?
Yep.
This volume, it was a gap 12 and then shot up. It's huge amounts of volume here. Huge. And that close was, it looks like right around 23. 23 sort of, it kept going, came back down. So after going to 32, it came back to 23. So it went up and then it came back to 23. And for whatever reason, 23, it shot up again and then it was off to the races here. So we have this here, 23, and now it hits at 22, 23 the other day, yesterday, 23, and today bounces up to 26. And now we're seeing call buyers. Yeah, this is like a technical move. I would say that there's some problems. The other lines I would start seeing is you see this right here, right? So we have this coming down essentially. Okay, you have this coming down, but I'm thinking 32 to 34, right around here. There's going to be there'll be some selling here. See all these people up here?
Yep.
All these people buying, these people probably buying some more. there's a lot of people stuck up here. You call it stuck. They're stuck. They're still holding, hoping for higher prices. They get higher prices, and they're gonna sell out. They get out. It's just human nature. So you recap your losses, and then you sell out. So here the average price between 22 and 56 is 34.17, is about $39. So probably a little bit heavier over here. So it's going to be around $34 to $35 is an average price on the way up here. And that's sort of where I think, so call it 33 to 35 is where I think this could get to, actually pretty quickly if it was going to go. But I'm assuming that the options are call buying, right?
Yeah.
And probably expensive. So the April is right. So 120 vol. So we're going to look at April. They're buying in the money options as well. Okay, that's interesting. Decent amount, couple of $1 million that they put into work.
Yep.
1,500, and then they keep buying. Okay, so let's see. 13, 12. Okay. Hold on one second. So let's see, 1035, 440, 463. So okay, so somebody, maybe they bid it here, took an offer, 109, 113, 1415. Okay, so even though the stock is going up, the implied volatility is also going up. So they're buying it here. They're paying higher and higher prices relative. Okay, so they're buyers, and now we can just look at 3271. So let's call it, what did we say? 35?
33.
33. Yeah. Okay, so there you go. 33. So it worked out the way we see it here. 33 to 35. 33 is the level that you have to be looking at. It looks like they're buying the right option if that's what they're thinking about. If it looks like they're playing a bounce here.
Mm-hmm.
I have no arguments against it. 23 it's a big level here. If 23 is broken here with meaningful volume, that means these people here, all these people that who bought it here, they're going to be likely to also be getting out with some of these people that bought it up here. Okay, so break 23, you turn seller, and selling could go down to, our next leg is somewhere around $11.
Right.
There was another one, NNDM, that was in the same basket as this.
Mm-hmm.
It's like 3D
printing.
We
did it together, yeah.
We did that one as well. Okay, so it did the same thing. You see how this is going down? This was at the same time that day where it happened. Stock, I think it was right here. Stock moved up, went to 18, came straight back down. Okay. Yeah, that one looks interesting. I think it's just trying to play a bounce. I'm trying not to. I think this part of the story is space. So Triple D is sort of a space trade, and I think that to be honest, I don't really like jumping in too much of these things, and I haven't seen let's see something. This is dramatic, but I don't know. I haven't seen like a get me out trade. It looks like this is a 5-day get me out trade, but like that one day where it just goes down, it's like a mistake. There's a long wick, like it just goes down like here or something, right? Because if you have 56 to 32 is 24, 24 from 39 is 15. Yeah, like one day where you just get like a really sharp, just like, I don't know when's earnings, but earnings is not as great as they want it to be. You get down to 15, everybody's bailing out, and then you move back up. That's pretty positive. That would be, at least for a bounce, it would be positive. I don't know the full ramifications of the whole story, but I would say it looks interesting to me. I have no arguments against it. It's definitely a buy. They're looking to play that 50-day moving average, and yeah, that's all I got to say about that.
All right.
What else you got?
All right. Let's move on to Mac. Real estate, malls.
Yeah, Mac. Real estate. All right, REIT. This is a REIT. Mm-hmm. Wow. These REITs are trading 100 vol. It's incredible. It's incredible. These things used to trade like 20. It's nuts.
Right.
All right. So what did we look at? The 17s here?
Mm-hmm, mm-hmm.
23 volume. At the money's up. 17s. We have 13. But I see, sorry to do that again. I see here 5,000, 13,000. So I'd like to know what that is, maybe. It looks a little, I want to see both. Let's start with the 15s.
Mm-hmm.
10, 20. 10, 20. Stock trades up. Volatility is going up all day. Just from eyeballing this and seeing these prints and seeing, without even looking at the data, just seeing that the implied volatility is up 22.5% today, and seeing how the implied volatility jumped here, sideways, up a little bit, then started making another move higher. That to me says that there's buyers all day here.
Mm-hmm.
So they're buying this MAC. Yep, let's just call that a buyer. Okay, let's see. Is there any spreads? Did you check the spreads? No spreads. Okay, so there's no spreads. No spreads. And let's look at the 17s. Same thing. So they're buying. Oh, here we go. They switch. Yeah, still buying. All day. Over here. Pushing the vol up. Okay. Reaching for the vol here. I mean, they're pushing this thing. It's like they don't care about the volatility, so they're pushing it. This is, probably just want to look at where the Junes are. I mean, if you like this, if it's going to happen tomorrow, if they're expecting an event tomorrow, that's great. But if you like this, I don't see why when something moves up this fast and in April, implied vols move up that much, this is something where you could just wait. I would wait a little bit. If you like the trade, I would just wait. The Junes are up to 95. I would just wait. They're paying a lot here. They're pushing this vol up is a lot, and over time, it's difficult to actually win that way, to keep chasing the stock up and chasing the implied vol up that much. It's
Right.
hard to win. But yeah, I see this is another we've seen SKT like this only a week ago. They were buying calls here, and then the stock took off to 22.5. Maybe is this being talked about on Wall Street Bets?
No, I checked. No, it sounds like it would be
Yeah, it sounds like this is starting to be another one where someone's expecting a similar type of move. And when is earnings? It's actually on May 10th, so it's not even catching earnings, which is interesting. Like I said, a lot of these things, they don't want earnings. Like you don't want the earnings. Earnings is reality. They don't want reality. They want the fantasy. So, they actually trade the names that don't have any news so that they could create the aura of news.
Right.
If that makes any sense.
Yeah.
Okay.
Yeah.
So you got to be careful. Yeah. I would be careful about that one. MAC. It'd be careful. I don't know what they're doing there.
Okay. All right. Fair enough. Now,
cool.
A lot of people asking for this VALE, but before we get into it, guys, make sure you like and subscribe if you haven't. Yeah, VALE. Make sure you like and subscribe. Really appreciate it. We hit 3K today. So
yeah, that's good. I really appreciate that, everyone. Thank you. That was really nice. I like that.
Very encouraging.
Okay. VALE.
I guess that's what they're asking for.
Yeah. Okay. So VALE, you see the first thing that I look at, one, I'm looking at the at-the-money implied volatility sort of flat to down. Again, that doesn't mean there's not buyers or sellers. It just means that it's down. Usually it means there's a little bit of selling, usually because it's down. But the whole market's up huge. And so volatility is down just because the whole market's volatility is down. So you have to give that some weight as well. But nonetheless, 163,000 does have some eyeballs here. But the second thing I notice is you see this right here, the open interest, Marco?
Exactly. Yep.
Okay. So 100,000. So somebody looks like they're probably getting out is my guess, just by looking at this, whatever they were getting in. So we can look at one and we can say, okay, here it's going to be easy. 60,000 traded at 16 cents. 60,000 spread. So they traded that at 16 cents.
Wow.
16 cents, 60,000 times. And in the 19s, they traded
7 cents
at 7 cents, which is on the offer. So I suspect that they sold the other ones. They bought these to close, and that's my guess. I'm guessing that they. I'm guess 7 cents is a lot for the 19, so I think they had to buy those. So they had to buy those at 7, and then they sold the others at 16 cents. So that's what I have, 16. So
Mhm.
it looks like they probably bought the 18, 19 call spread, or they were buying these, and now they're just actually selling them. I think
Right.
that's what I think. Okay, I'd have to look to see for sure these, but that's what it looks like.
What's going on with other commodities? We mentioned
So
some yesterday, uranium, but
yes, so uranium, um, it's a commodity, but the main ones are like FCX,
Mhm.
right? So FCX has been trading a little bit, not the go-go that it was over here. It's nothing that it's not that it's broken either. I wouldn't say all of a sudden this is like a broken stock, but it's probably has another run, to be honest. I mean, just calling it the way I see it here now. It's gotten through this. You can
Mhm.
see 32. So it got through that. When it fell through this, we got short here, it went all the way up here. Okay. 39 is a level, 24 and a half, 25 is a level. So what's interesting is you have 25, 32, 39. So 7, 7. Just to show you, I do this, we're doing this all the time here. And I to be honest, I don't know who does it the way I do it. I try to do things, keep it simple, but I've done this for 25 years. Just I think it's a great way to frame an idea, and you can see symmetry. And I'm a patterns type of guy. I see patterns very well. So when I look at something and I sort of try to teach people, I try to say, look at the lows, look at the highs, try to find that one or two lines, and then find any symmetry. So we're looking at 32. I think it's an important level. Um, I'm also looking at the MACD here. See this MACD? It's high, high. It still
Mhm.
hasn't broken anything. It still could make another, move here where it doesn't make a high, and this could actually go to 42. If the market goes to 400, SPY goes to 400, 405, maybe this goes to 42. The MACD doesn't make its high, and now you have later on in time, you're going to have a MACD diversion. I could see that happening, is what I'm saying.
Mhm.
But this MACD high, high, and the stock is, showing strength, showing strength. It usually just doesn't end with a high, high, and then it just collapses. It usually just doesn't collapse. Usually, I'm not saying it usually wants to do its final dance, which is up, so that this MACD high, high, and then another MACD high that doesn't actually make the previous high. So that's
Right.
how I would read this. I would read this as so far, this is pretty bullish. Like every other commodity, it hasn't really broken down yet. However, speaking of, we looked at VALE. So VALE looks like maybe someone is getting out of that call spread. You have what's another name? Someone brought up tech last week. It's been on my mind. I've been looking at it and trying to understand where this could go. Again, same thing. It's trading a little bit weaker than when we were sorry on this side. But has it broken anything? This is not so good, this down move like this, but it's trying to fight at this level, and it's doing its dance, going up. It's doing this and kind of wants to do that, until it breaks something which is probably right around $20,
Mhm.
and you got a 50-day moving average that's rising here, right? The 50-day moving average, this hasn't broken. I'm still looking at it and saying, I kind of like that trade. It's not bad, but am I late to this commodity where I'm slicing, trying to slice the last piece of profits out of this? I'm not sure. So it's on my mind. I'm thinking about it. But I would also say, why is I'd start when I look at these things, I start asking myself, why is commodities weak? And I've been telling you, I think it was here. I was asking you to tell you to look at the UUP, which is the US dollar, right? And over the last couple of months, I've been trying to show you that this is macro stuff. They call it macro investing, where you're looking at macro events: the dollar, yen, gold, the US dollar, bonds. I'm trying to show you how to develop that part of the game as well, because you're not just looking at individual stocks. We're looking at the big picture, the market, the macro effects that are coming into the market, and trying to make sense of that as a backdrop. We're looking at sectors and trends, and then we're looking at the individual names. And we're trying to piece all that together. So behind every idea is sort of this methodology of, layering in a lot of the things we're looking at. We talked about this in this session, the tax and the rebalance and the COVID-19 checks. That's more of like a macro type of event, a macro type of thinking, where it's these outside forces that are going to affect the bigger picture. But here, the US dollar, I think we were talking about it right around here, where we were saying you want to watch this turn. I mean, this is, let's go back a little bit. Here's a weekly on the US dollar. This is a big move over the course of COVID. And you could see how it's pretty easy to see. It's been going straight down.
Right.
And the market's been going straight up at the same time. So when this is starting to flatten here, what I was starting to worry that, if this starts getting legs up to here, well, what do you think the market's going to do? The market, when this was going down, the market's going up. This is going sideways. If this goes up, does the market go down? Does the equity market go down? Okay, right. So US dollar, in different time periods, US dollar could be good for the market. US dollar in this time frame, I think US dollar up could actually hurt, could hurt the market a little bit here. But historically, you want a good, strong US dollar. It's just you got to look at different time buckets. Here, a US dollar going up would change the pattern, or would keep the pattern. The pattern would have to change if the market's going to keep going up when the US dollar now is going up. It spent the whole last year doing the opposite. Now it's going to keep going up while the US dollar goes up. Maybe, maybe not. When the US dollar is up, it becomes more. It becomes harder for for the outside world, the emerging markets, for people outside the United States to actually take their money, change it into dollars, and then buy goods, buy commodities, and buy grains, buy any type of commodity that's based on in US dollars. It becomes difficult. So we have that in the backdrop, again, macro, but keep an eye on this. It's important to keep an eye on the UUP, and it's the easiest way to do it. Or you can just go look at the dollar index, dollar yen, dollar index. You should also be looking at this chart, right? This is an important chart. This is bonds. This is 10-year, 20-year treasury bond yield. So this is something that is important. And what happens, you should be asking yourself, what happens if bonds do this? Or what happens if bonds do this? We got a scare here, because if bonds are doing this, interest rates are going up, and you saw what happened when interest rates go up. So if this happens, interest rates will go down. That would mean equity market going up. Okay, because at least the fantasy names, the growth names would do okay. But we have in the back, so that's one way to look at it. But in the backdrop, again, we have all this potential equity selling. So there's a lot going on in the macro that I think it's worth at least getting acquainted with and learning a little bit here before you're gonna. Let me rephrase it a different way. You're gonna start hearing a lot of the macro stuff in the next 3 months.
Okay.
Because the media, and you're going to hear the story start with bonds and US dollar and inflation, or no inflation, or everything that has to do with the macro trade. So I would keep that. I would start looking into this type of stuff.
For sure. Okay, cool.
All right.
Nice.
Cool.
Yeah,
Cool.
definitely.
What else are we looking at?
Now, what else are we looking at? I wanted to ask you, do you have any sort of process how you find your own ideas, regardless of the UOA? So, like, what do you follow?
Yeah,
do you look at some trends?
For sure. I mean, look, we're doing the process, right? On a day-to-day, right. I am looking at different things. I'm looking at all the Chinese EV names, right? I'm looking at how they're trading. We're trying to find. We're not every day. There's 200 UOA names every day, unusual option activity every single day. So how are you going to trade every single one? What you're trying to do is again, have a backdrop of the market. I'm an odds maker. I think of myself as an odds maker. I don't know which way that's going, but I'm going to lean a little bit one way or the other because I see that the risk reward is better this way. And right now I see a better risk reward towards the upside. Mm-hmm. It's just the way I see it. And I think that the market will give me time. Right now, at least, the market will give me time to switch quickly if I need to switch quickly. Okay, so that's just because of what I'm seeing out there. I see more and more people are buying puts. I know that slows the market down for me. So I know. So these are things that I'm picking up as we're doing this each day, as I do it each night. I would say learn the trends. I would say look at different stories. For example, I'll read a story about. I read it about a week and a half ago. I'm a visual person too. I like to see the picture. So they showed a picture of the boats, these freight carriers outside of California, lined up. I mean, there's like 1,000 of them, sitting in the ocean outside California. And you're wondering, what's that about? And then you're thinking, you start reading, because of COVID-19 and the unions, the workers are not on the ships taking stuff down. So you got a lot of stuff backed up. Oh, that makes sense. That's why you walk into a store, in New York and there's not a lot in the shelves or things are just not out of stock. And clearly there's an online push as well. But something like that tells me, okay, that's interesting. To get those freights from California to the Midwest, how do you do that? Well, it takes railroads. We don't helicopter these crates. I mean, they undock them in California, and then they take the railroads. They put them on the railroads and on the trains, the choo-choo trains, and they go choo-choo all the way to Chicago, right? And there you go, and they're going all the way around, and the grains are all over the world. So if we're about to embark on a $1.9 trillion project, or maybe it's 1.5, whatever he's going to throw at it for this whole EV and power, we're going to need those trains providing the goods all around the country. So that's the story, right? That's the backdrop just from reading one article. So if you look, I'm looking at names like UNP, right? Union Pacific, right? And I look at this name and I'm like, what do I see? I see a pretty damn good chart there. Like I'm looking at this and I haven't seen much options activity, but I'm looking at a really good chart after it broke, did this V, and it went from 180 to call it 102, 182, so about 80 points. 80 plus 180 is 260. You're looking at something, and by the way, this is a decent line too. It's not like I'm using that. We have a lot going on over here, and then it broke out, started going up here, did this. So you have this 105.80, call it 75 plus 80 is 255, which would be somewhere around here. And then, you have a stock that's trading well in the beginning of this year, hanging out near ties. So on a breakout, you could see something from 215 to call it 250. Now, that's just Felix's reading an article, thinking about the railroads, the choo-choo trains, and thinking, maybe, I know Warren Buffett used to like the trains. I don't know if he still does. So then I start looking to see who's long the choo-choo trains. And then I say, okay, I'm going to take a look at that and wait. And because what I just did is not edge. It's not, I don't have edge on fundamental analysis. And we're never going to have edge by looking at 500 names over the course of the year, because nobody could do that. To get deep edge in the analysis, it takes hours and hours and weeks of work to go through this, build models, figure everything out for yourself. And we just nobody has the time to do that. Even at the hedge fund, they have 20 guys and each person is only handling 4 or 5 stocks, right? But they're becoming experts in those 4 or 5, call it 10 stocks. So I'm doing all of that. And then what I'm doing, I'm sitting here waiting for something to happen. I'm waiting for news, or I'm waiting for, the opening up of the market means, and COVID vaccines means maybe everybody goes back to work. They're taking these freights off and things are moving to the middle of the country. Okay, so now where are the hedge funds who are looking at these names? They got to be doing the work saying, oh, this stock is going to go to 300. Right, 350 on the open. And so when they do that, they'll buy some stock, but they'll also probably buy some options. right, on a breakout. And so I'm waiting, I'm sitting here like an alligator waiting for, someone to come in and start buying calls. Now, I can tell you that, one thing that I'll show you just to keep going with that story, because what are we doing? We're going, let's do CNBC. Let's see here. Am I signed in? Yeah, signed in. So, so I have that in the back of my mind for the last couple of weeks. And then I have, let's see here. Where are sorry. I want to find, because I usually look in the morning for they're usually front and center. I don't see it. It got pushed back because of other news. But one last attempt here. Markets. And okay. You're dead to me, CNBC. So one thing that I saw today was Citibank actually made Norfolk Southern a top pick in the rails, right? So they upgraded Norfolk Southern, which is NS. UNP, they all pretty much trade the same. Some people like one versus the other. They're all railroads. They all do the same things. They send choo-choo trains with these freights, and they deliver the goods. So this one here was just upgraded by Citibank. They want a top pick at Citi. It's Norfolk Southern. It's just another train, just like UNP. So same thing here. I'm looking and I'm saying, okay, there's a move, right? There's a chess piece being moved. Someone is liking the name. And how do we look at this? 110, 210, 210 plus 100, 310. So, can this go to 310? Sure looks pretty good. I mean, the stock is just trading very well over a weekly basis over the last 5 months. So, again, nobody's talking about the railroads. I'm sitting here kind of liking the railroads, but I would like to see, I haven't seen any options trades come in. So, the next thing I would look at, just to keep going further, sorry if this may be too much for you, but, I'll look at NSC and I'll say, where's the open interest? Is there open interest? Show me the open interest. Not much. How about UNP? Where's the open interest in UNP? Because that's another one people like. Open interest. A little bit more here, 13,000 in March. So I would look into this one, like when did that trade? Who did it? Can I spot them somewhere? These railroads are a little bit more bigger. BlackRock gets into it. The big names, the bigger hedge funds, the guys who are going to own this for the next 2-3 years, because we're in a bull market. So, we're in a bull market in commodities, and I'm wondering how come the railroads are not following the same way, right? That would be the next move, you would think. So that's why I hesitate about this. If there really is a super cycle, is it just China buying everything and hoarding it themselves? Then that's not going to be good for the United States, because prices go up without really anything happening. All right.
Okay.
Cool,
Cool.
man. Any other questions?
Yeah, actually, we got one UOA and then one question. Let's take a look at Western Union, WU.
WU rings a bell. WU. Western Union. Wow.
Some cool buying
Crazy stock, but it's looking pretty interesting. So which one is that? Is there a specific one?
Yes, May.
WU.
In May.
Sorry. 48,000. It's a lot for Western Union.
Like reshuffling going up in spreads.
Okay. Yeah. So just by looking at it, I would say that somebody had the 24-28 call spread. I don't know if they bought it or sold it. Okay. But somebody had the 24-28. And it looks to me that they just basically switched it from the 24-28 to the 26-30. Okay. So they moved it up. Okay. So tomorrow you'll probably see this as close to zero and this close to zero. And then this one will be about 11,000 or so. What are they doing? I don't know. Let's take a look. 10,187 on the bid. So that looks like that. This I would suspect is on the offer. Okay, 40 closer to the offer, I would think here. 30.4 vol. Okay. And then this one I would suspect is on the offer, the 26th then. On the offer here, 10,001 on the offer. Okay. And then this one is going to be on the bid. 20 cents close. This is on the offer, but I think they had to do you get paid. You always look at the bigger side, the bigger dollar amount. So this is, even though it's on the offer, the other one's on the offer for spread is normal. Okay. So it looks like, to me, it looks like, and then I would go check to see when this trade was happened. It looks like the stock is 25.58. They probably paid, how much are they selling this one out today for? About $1.70, $1.80, $1.75, call it. They probably paid $1 for it, right? Going in. It's now $1.75. So they can take that out and then they can pay about $1 for this. So they take out 75 cents on that trade. So it's really just taking some money off the table and moving their position to 26.30. Can I get to 26.30? So it looks like just a breakout here to above. I mean, I don't see why not. If you want to frame this one, it's basically clearly, to me, this is 24 is a level. And then you got around here about 27.5. Let's look at this right here. So 17, and then we got the 19. Okay. So 17 to, then I just overlay. I just always do the 17 to 24.5 is 7.5. 7.5 from 19 is 26.5. Okay. They think it actually gets through here and it's going to need, basically this is the high, but this is where the closes are. So 26.5, you see that reaches exactly there. So ABCD level, this Elliott wave kind of gets you here. The frame is sort of 26.5, 24, and this is nothing for right now. But, I think it would need some good earnings to get through 26.5, and then they're happy to sell it at $30. So when is the earnings?
Right before.
Earnings are May 4th. So they're playing for the earnings of May 4th. So there you go. And by the way, they did the 24.28. They made some money, and now they're just taking some money off the table, which is just good risk management. It's exactly what we're telling you to do at Options Geek. It's selling a third, or in this case, it looks like they're rolling it up, but they probably took a third off, a third of the money they put on the table.
Right.
Okay.
Right.
So no different than what I'm telling you to do, except they're just doing it in a spread. So there you go. I mean, it's, again, I'm telling you that's how they do it. So and now you see it in real life there.
Cool.
Okay.
Now we got one question that so Pam asked me how I did it on my Oracle. I don't know if you want to reveal the secret. I did a little bit. So when I bought the one lot, what you told me is take some money off by selling the spread. And,
right. So what I told you. Okay. Sorry. Okay. So what's the secret?
And they want to know about it. They want to know more. People are interested. So
okay. Okay, so you bought one lot. So I was asking you, hey, what did you do in Oracle? And you said, I didn't do anything. I only got one. And I said, okay, so when I see someone having more than 3-4, when you have 3-4 positions, you can watch it, this that. So what I was saying to you was that I think there's a good opportunity here to perhaps, if you bought the 70 calls, you're up 100, 130%, 120%, you could actually sell one of the 80 calls for, I think it was $1.50 or something that you had, $1.40, $1.50, and you could take out a good part of the money that I think what was the price that you sold it at?
$2.90 to $2.95, yeah.
So that's what you sold it at, or that's what you? Yeah, that's right. That is what you sold it. Yeah. So you actually took in, right? So it was about $3. So the 8. Right. Well, let's just look.
It was around
the Oracles,
right, 320, my position, and then I sold one at 295.
Gotcha. So you paid about 320, and then we have September's, September 80s. Okay, so here, right? So you sold them at about $320, $3. So the idea was, okay, you could take 100% right now, but your thinking was, I like the name. I want to keep it. I want, this is trading so well. I really like the story and whatnot. And you don't want to get rid of it. And I said, okay, now earnings are tomorrow. So you actually do take some risk. And I'm always about trying to reduce a little bit of the risk. So what I said to you was, why not keep the 70s, okay, and then sell the September 80s at like $3, and net, you have all your money off the table. And now you still have one 10-point call spread where if it goes up, you can make $1,000 on that trade, and you literally have your money off the table now. So you have these chips out there that, hey, if it goes up, I'm going to make $1,000, and over time, or as it goes higher, you'll make $200, $300, $400, $500, and you can decide what to do as it goes up. But right now, because we don't know what's going to happen in earnings, and it could easily trade 67 again, then at least you took your money off the table and you're not concerned. And if it goes back down to 67, then you can buy those 80 calls, back at, let's call it $1.20. And you would have taken your money out anyway, 200, at least 67%, and you still have the 70 calls, and it's 4 months away. So it was just, it's just a way to, and you can buy more if you want at 67, because as time goes on, the 70 calls that we have right now, they're around $8. The 70 calls that we have, they start, if it trades back to 70 after the earnings, then this is going to trade down as well. Volatility is going to come off a little bit. It's just a way to take some money off the table, but also to give you, to give you peace of mind, but also to give you access to the earnings. And if it goes up to 85, hey, you're going to still make $700 on that, on what was a $300 position, and you took your money off the table. Ultimately, we'd love to do that on every trade, right? So when you have a one lot, sometimes you can do that. It's because you don't want to get rid of it. You think it can go. It's a trade that could make you, let's say, $3 can go to 10, so it makes $700. And that's always good. Or you got the same type of trade on, it won't go up as fast, but you get the same type of trade on that, and also you took the money off the table. That's what I was trying to do for you.
I really liked it. Yeah, that was great.
So now it's also peace of mind, right? Like you almost don't care where it goes. It's like that you always want to be that way, by the way. You always want every position to be like, I don't really care where it goes. If it goes here, I'm going to sell some. If it goes here, I'm going to sell some. I always want you to be thinking about doing something near a stop or near your exits. And if you only have one, that doesn't mean you just wait, because, it goes to 100%, then goes back down, and you missed. We need to capture something when it goes up 100%. It's hard enough to find these trades that are going up 100%, right? So when it goes up 100%, we have to catch something. I don't want to be left like not catching it. The SPY trades that we did, same thing. I think people finally realized it worked like a beauty. People say, oh, this is great. Thank you. Sending me emails. Yeah, it went down. You took some off. Everything shot back up. Now when they're shooting back up, same thing. Take a little bit off. We don't know. Remember, I'm forecasting a very volatile next 6 weeks. That means 410 maybe to 360. These things can happen. So we want to be the higher it goes, we can move 360 back to, goes to 410. We would then say back to 380. But we're looking for volatility over the next 6 weeks.
Okay, great.
All right, my man.
That was awesome.
Okay.
Thank you. What you guys think of that? Let us know in the comments. I think you guys are going to like that strategy. And yeah, make sure you like the video. Thank you, Felix.
Awesome. Thank you so much. I appreciate it.
All right,
We'll see you tomorrow.